Let's start with the gold prices. I mean, what's keeping gold prices this high? And is it still acting like a safe haven, or is something else driving the rally?
It's both. Just to let you know, today we peaked above 3,350 per ounce US dollar per ounce. So honestly, the difference is that it's not only moving because of fear. It's moving because of, I would say, doubt. And currencies and even central banks keeping inflation in check, central banks hedging their own policies as well with gold. And now with the renewed trade tensions, there's doubt in the idea of global stability itself. It's still acting like safe haven, yes, but not in the traditional sense. I think it's less about immediate crisis, more about a long-term hedge against a system that feels, I would say, stretched. And you've got central banks buying, especially from emerging markets, China, even European countries. But now we're seeing retail catching up as well.
So with the U.S. ramping up tariffs on China again, where is this headed? What's likely to happen next?
I would say it's headed toward a very different global trade dynamic than what we've seen maybe 5 years ago. This time also, it's not about short-term leverage or short-term, I would say, interruption and supply chain. It's about long-term decoupling, where it's U.S. not only taxing goods. I think what's happening, it's forcing also countries to rethink the entire supply chain. Maybe we're moving towards more diversification, more regional alliance, and potentially, definitely more fragmentation. I don't think it's no longer U.S.-China. It's the rest of the world asking maybe where they fit in this new landscape.
And then how could it ripple into economies like South Africa or even trade hubs like Dubai?
I mean, it already is. Countries like South Africa could benefit, by the way, from these alternative sources. I would say especially in sectors such as the minerals, raw materials. But I mean, it also means more exposure to price volatility and demand shifts. Now, in Dubai and in UAE as well, we need to know it's an economy that thrives in rerouted trades, new logistic channels, financial flows shifting, but it's also exposed to the capital market mood. If global sentiment turns risk off, it definitely affects also the investment flows, real estate appetite as well. So the pressure is on, but I think also countries like South Africa and the UAE can benefit from new opportunities as well.
All in all, Farah, with this kind of unpredictability that we're seeing coming out of the Trump administration and with the dominance of the U.S. on world economy, the Asia-Pacific region and beyond, are we in for uncertain times, difficult times?
I mean, I don't want to generalize because some sectors would benefit while others might be under pressure. And we still don't know the end of this tariff pressure between the U.S. and China. And we need to know Donald Trump usually comes with the most aggressive card he can play. So they would sit down and negotiate terms. And this is what we saw, by the way. Like, we had this huge tariffs on many, many countries, allies countries as well. But then they were on pause for another 90 days. So is there a threat to affect the global growth? Yes, it's real, especially when it comes, as I said, the supply chain, transportation, industrial sector. But I think maybe it's too early to predict a full recession or a global recession. But we need to stay aware as investors to see at least which sectors would benefit and try to hedge as much as we can with safe havens such as gold. We're seeing inflows to safe haven currencies like Japanese yen, like Swiss franc as well. So, I mean, there's always opportunity in the markets. As investors, we need to just look at the right entry points.
All right, Farah, shukran so much for your time and for chatting to us. We really appreciate it.